Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. Well, it has been another day of pullback and now Nifty has slipped below that 25,800 levels as well. Sensex too has been down by about 370 points. And yes, all in all, it has been a negative setup for the markets and it's a choppy trading session for today as well. Sectorally, apart from the PSU banks, which has been hovering with about 1.5% gains, all others have also plunged into the sea of red. PSU banks particularly, they have seen a spectacular rally this week as well. Rising about 5%, while we did see pharma, auto and IT indices, all of them did see a cool off this week. But yes, today also marks the end of the month of October, and so far this month, both the headline indices have seen a good run up by about 5%, while mid-cap and small-cap indices have outperformed. But yes, how the month of November is going to shape for the markets is something that we'll be watching out for, because we still have the trade deal which needs to be struck with the US, and more earnings are yet to get reported. So all of this will shape the tone of the trade going ahead, and whether or not earnings is something that can convince FIIs to make a comeback into the Indian markets is something that we'll also be tracking. But yes, to understand the last minutes of the trade and how you should be positioned, I will go across to Ashish Bahety, Technical and Derivative Research Analyst at ProfitMart Securities. Ashish, good afternoon. Nifty once again slipped below that 26,000 levels and of course, below that 25,800 levels also, given that all eyes were set this week for an all-time high. So what are the levels that you're watching out for now?
Good afternoon, Lovisha. After almost, I'll say, 4 consecutive week gain, Nifty has just given a slight bit of red closing today on the weekly charts. Will be giving a slight red closing on a weekly charts. I'll say this is a positive for the market overall. Market has been consolidating, and there's been a good sector rotation happening on these levels. We've already seen 26,000 as a resistance area. Nifty is getting rejected a couple of times from that zone last 2 weeks. So we'll have to we need some significant news flow or some significant pullback to cross these levels. I think those who are holding long should exit right now. If the Nifty corrects to 25,500, that will be a good time to re-enter the long positions. This is the right time to book the profits in both Nifty and Bank Nifty.
Okay, all right. All right, Ashish, broader end of the markets, they not only outperformed this week, but also this month. So can we expect the trend to continue going into November?
It will be, but I think, see, this was I'll say this month was mostly a earning month, and there were a lot of good earnings reported by many companies. So because of that, there was a push into the market along with the festive mood and the festive quarterly updates. I think November would be a good month. We are progressing for trade deal between the trade deal already happened between India and between China and US. We are expecting some trade deal or something of that sort might come as a news for India and US also, and that would push. If that happens, that can push market to the new highs.
Okay. But yes, from the PSU banking, it was one of the top weekly performers as well. And what can we watch out next? And anything that you're liking from the space?
It's been an amazing strength of all the PSU banks. I think the recent news of the Bank Nifty inclusions also, and the rebalancing also will going to be helpful for the PSU banks. But I think it's not wise to chase it at this point of time. The rally is getting in the last leg of the exhaustion. So if anybody's holding long, should continue to remain long. Our top pick remains SBI and CanBank in this area.
Okay, all right. But yes, Ashish, let's also talk about IT sector because that made a comeback this month, 5% gains for the index as well. But can we see further gains going ahead? And what are you liking from the space from the IT pack?
See, that's a big positive for the Nifty as a whole because we've seen IT was continuously in pressure, and that was the one sector which was continuously dragging Nifty down. We are bullish on the IT, but we remain bullish on only on the large cap IT. Sorry, on the mid cap IT, we are remain negative on the large cap IT. So stocks like Persistent, LTTS, and even Coforge will do good. But one have to be very cautious on the IT because we've seen today after the numbers, emphasis got beaten out. So one has to be very cautious and very picky on the sector as a whole.
Okay, okay, all right. All right, Ashish, let's get your views on the pharma sector as well because it was one of the top underperformers this week. And what are we watching out? Because we did see Cipla still remaining one of the top Nifty laggards as well on the back of its second quarter performance.
See, in the pharma, I think both Divi's and Loris are doing good. Not a pure pharma play, but more of a CDMO play. Other than these two, I think Oro and Glenmark is also doing good. Cipla, I think there's a steep reaction after the numbers. So one has to be remain cautious in this space and be very selectively long on, can be very selectively long on particular stocks.
Okay, all right. All right, let's discuss some of the individual movers today then. We'll talk about ITC first. The stock has done well on the back of its second quarter performance. Most brokerages have maintained their buy call on the counter, given that the company reported a steady performance for the month, for the quarter of September. Revenue, excluding the agri business, rose by about 7% on a year-on-year basis. And the brokerages have been saying that the volume growth has remained quite strong, which is better than many of the FMCG peers as well. And as a result of which, we have seen that Jefferies has also given out a buy call on the counter, and they've shared a target price of about 535. Citi has also given out a buy and shared a target price of about 500. Ashish, 500 is the next target. Of course, it's on a fundamental basis. But for you, ITC, how does it look on the technical charts?
See, on the upside, there's a bigger resistance near the 450 zone. So I think the recent rally, which started almost 400 onwards, can lead to 445 to 450 zone. If that surpasses with the volume, then we may see 480 or 490 on the chart. But I think that will take time because it's a heavyweight stock and have a direct impact on the Nifty momentum. So we might see some consolidation happening in the 450 zone before stock going to 480 or 500 zone. So if anybody is holding long, should remain long, should stay remain long for the next probable target of 440 to 445 to 450.
Okay, all right. That's the view coming in for ITC. Let's take a stock of Bharat Electronics as well because the company came out with its second quarter performance. Net profit has risen by about 18% on a year-on-year basis. Revenue is also up by about 26% on a Y-on-Y basis. The stock is one of the top Nifty gainers as of now with about 3% gains. And so far this year also the run-up has been quite spectacular. Ashish, coming back to you, Bharat Electronics at day's high level as of now.
Yeah, it's been actually contributing to the highest points in Nifty right now, almost 14, 15 points and off Nifty is coming from BEL. And stellar move after the numbers. Stock has given a clean price volume breakout. If you see the volume, it was already clocked 44 million share volume on the NSE itself, which is like almost 2.5 times more than its average volume. And stock is given a breakout above its recent highs. So we think the stock is well placed for a next trajectory of 450 zone. So we're expecting another 25 rupee move from here also. So one can go long even these levels by keeping a stop loss of 419.
Okay, all right. That's the view coming in for Bharat Electronics. Let's also talk about ACC on how the counter has been doing. Let's take a look because it came out with its second quarter performance where profit has surged about 5 times while revenue has risen by about 30% from a year-on-year basis. The stock is doing well, 1.5% gains coming in for there as well. But yes, Ashish, for ACC, of course, the stock has been an underperformer so far this year, but reacting well on its positive second quarter results.
Yeah, so stock has come to a significant level, which is like an exact 200 demo, and it made an attempt to surpass that level today itself. That's like exactly that 1900 zone, and that's also a call writer zone. I think next week we may see it surpassing above 1900, and if that happens, stock is well placed to head to 1960 trajectory. So chart stock is looking good on the chart, but should maintain a stop loss of 1860.
Okay, 1860 as a stop loss for ACC that we need to watch out for. All right, let's talk about the next stock in focus. That is your Maruti Suzuki. It's flat with a positive bias. Came out with its second quarter numbers, and the numbers have been fairly good. Net profit has risen by about 7% on a year-on-year basis. Revenue has increased by about 13% on a year-on-year basis. The stock, however, it's flat as of now. But yes, Maruti Suzuki, how does the chart looks like? And of course, let us know your near-term trends for the counter.
See, we've seen the auto to rally the first in the entire of all the sectors, and the rally started somewhere around the mid of August itself. And from last, I'll say, 3 to 4 weeks, most of the auto stocks, including Maruti, has been consolidating. The upper range for Maruti has become 16,600, and the lower range has become 16,000. So the stock is consolidating in that tight range. I think the fresh move will start only if the stocks moves above 16,500 trajectory, which will be its all-time high trajectory. So a new all-time high breakout only will want to give the stock to move to a new orbit of 17,400 or 17,500 levels kind of trajectory. So if anybody is long, should stay remain long. 15,900 acts as a big support for the stock.
Suzuki, then majority of the auto stocks did see rally after the GST cuts, but yes, today the stock is also doing well on the back of its second quarter performance. Let's move on and talk about the next stock in focus, Dr. Lal Path Labs. The stock is doing well today. The company did report its second quarter numbers with the profit rising by about 17%, while revenue has risen by nearly 11% on a year-on-year basis. But yes, Ashish, I mean, the stock did reach 3,400 levels, but since then it has cooled off and it's now stuck in a range.
Yeah. So, in fact, mid of September, we see a steep correction in Dr. Lal Path Lab, exactly as you pointed out, from 3,400 stocks slide till 3,000 odd zone. But it's been consolidating. Even after the numbers, there was a reaction, but that got muted out. However, I think stock may rally upward because it's made a clean base in this zone. So we expecting stock to move another again back to 3,300 plus area. Stock has made a good support near the 3,030 zone.
Okay, all right. 3030 zone could be the next support that we can watch out for Dr. Lal Path Labs. Now, given that the earnings reaction will continue, we'll also talk about Swiggy because the stock did fall from the day's high level, but the company reported Q2 numbers, which brokerages believe was better than eternal. Now, Nomura has given out a buy call on the counter and said that the proposed fundraising that the company plans to do via QIP will strengthen the balance sheet. CLSA has also given out an outperform call on Swiggy, and they've given out a target price of about 493 rupees per share. Ashish, Swiggy for you, how does it look like? I mean, it has been range bound for some time now, and today, right now, the stock has cooled off from its day's high level.
Yeah, in fact, it's in pressure, and from last 6 days, it's clearly making a lower low pattern. Today also, it did made a high or crossed the high from last 5 6 candles, but again, that area got rejected, and stock has slide back to 410 zone. So the investors should remain cautious here. If the traders should book profit.
Okay, traders should book profit for Swiggy as of now. All right, let's talk about another stock in focus, that is your Intellect Design, which has gained about 9% in today's trading session after the company posted a strong set of numbers for the second quarter. Net profit is surged by about nearly 94% on a year-on-year basis. Revenue has increased by about 36% on a year-on-year basis. EBITDA has nearly doubled, and if you look at the margins have also expanded to about 20%. Intellect Design for you, Ashish, how does it look? I mean, 8% gains coming in for the counter.
Yeah. So if you'll see on weekly chart, stock has made a W pattern and given a clean breakout. We've seen a fall in Intellect Design somewhere in the month of July end, where the stock slide from 1,200 to almost 1,000 mark. So there was almost a 20% drop in 2 weeks, and there was a gap also made during that time. The stock is filling that gap now, and it is surpassing the I'll say the resistance zone of that area. So I think stock is well placed to head to 1,200 zone, but it's not advised to buy at this level. If any dip comes in the stock, can be used as a buying opportunity.
Okay, any dip can be used as a buying opportunity for Intellect Design then. Let's take another stock in focus. It's your RITES. The stock is not doing well, but the company did say that it has signed an MOU with SCI, Shipping Corporation of India, to explore collaboration in maritime logistics and multimodal transport solutions. RITES on the charts for you, Ashish, how does it look like? Because the past 1 month, the stock has not done well.
See, stock is continuously in pressure, and despite the news flow, we have not seen any significant move on the upside. In fact, there's a pressure on the stock, and there's a profit taking. So we remain cautious here, not a buying advice at all. Anybody holding long should keep a strict stop loss of 240.
Okay, 240 is a stop loss for the company. Let's take another stock in focus. That is your GAIL India. The company did report a net profit and revenue which has beaten the expectations, but margin has narrowed about sequentially. So GAIL on the charts for you, Ashish, how does it look like? I mean, today the stock is down with about flat with a negative bias. But from a medium term perspective, GAIL?
See, stock has both GAIL, ONGC, and Oil India have been humongously under pressure, and we've seen some rebound or some respite in these stocks in last 3 to 4 weeks. Stock has given a clean breakout above 180, which was acting as a strong resistance area. So we are hopeful that in the following week we may see stock moving towards 195 plus zone. So anybody can go long, or anybody who's holding long should keep a stop loss of 177 for the next probable target of 195.
Okay, all right. 195 could be the next target for GAIL, and we'll be watching out for that as well. But yes, let's talk about one of the top buzzing stocks today. That is your Navin Fluorine. The stock has jumped by about 14%. It's the best single day that the stock has seen since March 2020. And the company has also reported good set of numbers from the second quarter. Revenue growth of about 46% from last year. EBITDA has more than doubled on a year-on-year basis. Margins have also expanded by about 12 percentage points. The company also expects a better second half across the segments for the company. And today the stock is trading with about 12% gains as well. But yes, Ashish, the stock has seen a good breakout today. What is the next level that we can watch out from here?
See, the stock is already trading at its all-time high trajectory and a clean blue sky trajectory. So there's no resistance area for the stock on the I'll say Fibonacci level. The next level can be 5,900, where stock might see some resistance based on the Fibonacci series. But however, there's a strong momentum in the stock already. I'll say up 10% plus in this week, and there's a good volume happened in this week itself. Delivery volume has also been the highest. So just trail the stop loss and enjoy the momentum. Anybody is holding long, just trail the stop loss.
Okay, all right. Let's take another stock in focus. That is your Manappuram Finance, because the shares got a downgrade after its second quarter results. Well, the consensus estimates of the price target suggest that the stock could be headed for another 12% downtake from a fundamental basis. Given that CLSA has downgraded the stock to hold from outperform, reduced its target price by about 6%. Jefferies has also given out a hold call on the counter and have shared a target price of about 285 rupees per share. But yes, Ashish, for you, how does the counter look like? I mean, the stock was already stuck in a range, but the second quarter performance, the street has not appreciated it.
The stock has rallied significantly from the, if you'll see year till date, I mean, somewhere in the January, stock was trading at 170 zone, and today it's at 270. So year till date, if you'll see the rally, it's almost by 60-65% even as on today. So yes, there's a profit taking, and there's after the numbers we've seen some profit taking happening here. But if you see today's from the day's low, stock has recovered well. The day low is almost close to 262. So the stock almost recovered by 10 rupees from the day's low. We would advise anybody who's holding long should take some profit here.
Okay, all right. Let's move on and talk about the next stock in focus. That is your Cochin Shipyard. I mean, the company has inked a letter of intent with Switzer in Denmark to construct a new generation of electric transverse tugs. Ashish, I mean, the stock is stuck in a range 1700 to 1790 rupees per share. And today it's also flat with a positive bias. What can we watch out next?
See, many of these defense-related stocks have been consolidating. We have seen a good rally in them somewhere in March and April. But now they are consolidating. So I think it's a good time to accumulate if anybody wants to hold them for a longer period. So Cochin is a good buy, and these levels, one should maintain a stop loss of 1700, and next probable target can be 1900 plus in Cochin Shipyard.
Okay, all right. That is something that we need to watch out for. Of course, defense stocks have seen a good run up till the month of May, and after that we've seen a bit of a cool off from those levels. But yes, let's talk about Vedanta. The company has reported its second quarter results, and as a result of which the stock has seen a drop as of now, 2% decline coming in for the counter. We did see that the net profit has declined by about 59% on a year-on-year basis. However, revenue has risen very modestly by about 6% on a year-on-year basis. Ashish, the stock did play a catch-up from September, but how do you see the way going ahead? Because today the stock is not reacting well to its second quarter results.
Yes, there's a profit taking, and if you'll see in last 2 months, most of the metal stocks have rise significantly. In last 2 months, Vedanta itself has given almost 20% plus kind of a return. So yes, there's a profit taking, and I'll say any drop till to 470 would be a good buying opportunity, because overall metal stocks are in good uptrend, and metal as a space itself is looking very attractive.
That's true. All right. All right, let's move on and focus about Strides Pharma, because the stock has seen a good up move today. It has hit an all-time high also on the back of its second quarter performance. Given that the growth is primarily driven by the other regulated markets, and the management has said that the net debt has reduced sequentially by about 46 crore rupees as well. So yes, Strides Pharma 9% gains, but yes, how does the outlook look like for you, Ashish?
The stock is looking very strong on the charts. There's a clean price and volume breakout happened with almost 10% kind of a rise. The volume has been significantly higher. If you see, the average volume of this stock is close to 100,000 to 200,000 volume kind of a day. But today it has clocked almost 9 million shares volume. The stock is looking good on the charts. We're expecting the stock to head to 980 or 990 zone, which is almost like the today's day high. Anybody is holding long, just trail the SL to 900 zone and remain long in the stock.
Oh yes, should remain long on the stock. Then that is your Strides Pharma. Now nearly 10% gains coming in for the counter, and the stock has cooled off from the day's high level, but still in the green with a good set of gains. Now let's move on and talk about Dhanuka Agritech. The stock has declined by about 5%. We did see that the net profit has declined by about 20%, while revenue was down by about 9%, and that's why the street is not appreciated, and it has been punishing the stock as well. But yes, Ashish, for you, Dhanuka Agritech, what is the next level that we can watch out, and can we expect more downside from these levels?
Yes, certainly. Stock is in pressure, and from the recent high of almost 19 or 20 zone, stock is corrected by almost 30%. So, and there's a good profit taking happening. So, our advice would be to either avoid this stock, and if you're holding long, it should be a good time to exit it.
Okay, all right. Good time to exit for Dhanuka Agritech as well. All right, let's move on and talk about Dabur. The stock has declined today on the back of its muted second quarter performance, and brokerages have also trimmed their target prices, given that they expect a gradual recovery in the second half, aided by the GST rate cuts as well. But yes, from the numbers perspective, the company has reported about 5% rise in consolidated sales, which is led by about 4% growth in the domestic business, while India volume growth stood at about 2% as well. But of course, the analysts have attributed to the impact of GST transition as well, given that 66% of Dabur's portfolio moved to a 5% slab as well. But yes, Dabur, for you, the stock is now trading below 500 levels, Ashish.
So I will say most of the FMCG stock have corrected sharply after the recent quarter numbers, and which was kind of expected that this quarter will be a muted for most of these FMCG stocks because of the GST transition. I think if anybody have a longer horizon of 6 to 8 months, these stocks are available at a fair valuation and be a good accumulating point for a 6 to 8 month horizon period. So we are bullish on most of the FMCG stocks, including Dabur. Our stop loss or the support area for what we are keeping in mind is 465 zone, and we're expecting stock to rebound to 550 in next couple of months.
Okay, that is the view coming in for Dabur. Now let's move on and talk about Bandhan Bank. The stock has declined today, and the stock is seeing about 8% decline in today's trading session on the back of its weak set of numbers that came in from the September quarter, where the net interest income has fallen by about 12% on a year-on-year basis, and profit has also slipped due to higher provisions that the lender took during the quarter. But yes, Ashish, for you, Bandhan Bank, how does it look like on the charts?
The stock has been continuously in pressure, where we have seen most of the banks, of whether it's a mid-sized bank or a PSU bank or the private banks, they all are trading well above their 200 MA and almost near to their 52-week high, or have made recently all-time high. But this stock is continuously trading or is continuously facing a selling pressure. Any pullback is used as a selling opportunity by the institutions. So our recommendation is to absolutely avoid this stock. There are far better stocks in banking sector available. Even at this point, stock like ICICI or Axis have correctly sharply, and they are available at fair better prices and have a bigger potential than Bandhan Bank. So it's absolutely a avoid category stock for us.
Okay. But what about IDBI Bank? I mean, the stock is seeing a good run up today, Ashish. I mean, the stock is at 52-week high. Some reports have emerged that, the financial bidding for IDBI Bank is expected to take place by the end of October as well. But for you, IDBI Bank, how does it look like on the charts from a near-term level?
See, stock it's been a little volatile, but the stock is good from the perspective of for the traders. The stock respect all its resistance and support area. Stock has surpassed its 100 zone, which was acting as a resistance area. Now we expect 100 to act as a support. So if anybody is holding long, just keep a stop loss near 99 zone, just 1 rupee below the support area, and we're expecting the stock to move to 115 to 120 zone in a couple of weeks.
Okay, all right. Let's talk about another stock in focus. It's been buzzing in trade. That is your TD Power System. The stock has gained every single day this week, and there is a 15% surge seen this week itself, and it is the best one that the stock has seen since May this year. The stock has also surged after the company has revised its top line guidance for the full year to about 1800 crore rupees from 1500 crore rupees, and they've also said that there is a steady inflow of orders which is coming from both the domestic and international markets. So Ashish, I mean, how do you view this counter? We've seen good volumes, 11% gains coming in for the counter.
See, on the charts, the stock is showing massive strength, but yes, the momentum indicators are too stretched out. So we think stock has moved to a little overbought trajectory. But yes, the strength is there on the charts. So not a fresh buy is recommended, but anybody is holding long, just continue to remain long and just trail the SL to 720 zone. We think the way stock is moving and the momentum is looking strong. Stock may even touch 800 plus zones soon.
Okay, 800 zone soon could be there for TD Power. All right, just one last question before we let you go, Ashish. I mean, let us know what are your top picks at this hour?
So we are bullish on the power sector as a space. Most of the power generation and power related capital goods stocks are looking good. So our top pick remains BHEL. We expect the way it has given a breakout. We're expecting stock to move to 290 area. One can go long here by keeping a stop loss of 245.
Right, power sector is something that you're bullish on. All right, with that, we have to let you go, Ashish, but thank you so much for your time and joining us. All right, let's take a quick check of the markets. Just 32 seconds to go before we hit the close. But yes, both the headline indices have been in the negative territory, and this marks the Nifty ending the 4-week consecutive gains in the negative territory as well. Both the indices have been flat so far this week. Sensex is right now down by about nearly 450 points, and Nifty has also slipped below that 25,750 mark as well. 150 points downtick that came in for the Nifty 50 as well. So given that we did start off choppy in the trade yesterday, also it was the day of cool off. Today also we are seeing that the profit booking is taking place across the board. after the Nifty reclaimed those 26,000 level. But yes, the last rates coming on your screen, Nifty 50 closing with about 0.5% cut, 25,732. That is where we are at. Below that 25,800 levels also, we couldn't hold that as well. 25,750 also has been taken off the table. Sensex also closing with about 450 points downtick. Nearly 0.5% cut coming in for the Sensex as well. Mid-cap index also showing a cut of about 250 points. Bank Nifty also seeing a cut of about 0.4%. But yes, the selling has been there across the board. Apart from the Nifty PSU Bank, which has been one of the top sectoral performers, or not only of just this week, but of course for this month as well. So the resilience has come in from the Nifty PSU banks, given that there has been some reports suggesting that the FII limit could be hiked for the PSU banks, which is why we have seen good buying interest coming in for the PSU banks as well. Other than that, you can see some resilience coming in from the oil and gas index as well. It has ended flat but with a positive bias. Otherwise, you can see metal index continue to see profit booking with about 1% decline. Other than that, Nifty auto index is also flat with a negative has ended flat with a negative bias. Nifty consumer durables continues to see profit booking with about 0.8% decline. Nifty IT index also with about 0.5% decline coming in for there as well. Nifty realty has also ended with a flat but with a negative bias as well. Coming to the top gainers and losers on the Nifty 50, let's take a quick look of that. Bharat Electronics, one of the top Nifty gainers. We did see the double-digit growth that came in from the top line and bottom line, and that is why we can see that the stock is reacting well to its second quarter performance. Nearly 4% gains coming in for the counter. Then you can see Eicher Motors doing well with about 1.5% gains. Shriram Finance ahead of its second quarter results doing well. L&T also extending the gains to about the second consecutive day. Yesterday, we did see some good positive results that came in for the engineering major. Brokerages also gave out a thumbs up call for the counter, and the street cheered that it could mark the return of the private capex as well, and which is why you can see about 1% gains coming in for L&T as well. Some of the IT stocks also did well. For instance, you have TCS doing well with about 0.8% gains, one of the top Nifty gainers. ITC also on the back of its second quarter results, where brokerages have given a thumbs up to the cigarette, to the steady growth seen in the cigarette and your FMCG business, which is why brokerages have remained quite bullish on the counter as well. ITC also doing well with about 0.5% gains. Coming to the top losers on the Nifty 50, Max Healthcare seeing a cut of about nearly 3%. Eternal also seeing a cut of about 2.7%, where brokerages have given a thumbs up to Swiggy's second quarter performance. So you can see some profit booking taking place for Eternal. Cipla also extending the gains to the extending the loss to about the second consecutive day on the back of its weak second quarter performance. NTPC not doing well after the street was not impressed with its second quarter performance. Both the top line and bottom line has been quite flattish for NTPC, which is why you're seeing decline of about 2% for the counter as well. Grasim, Kotak Mahindra, some of the other top losers on the Nifty 50 as well. But yes, let's now go across to understand how the market looks like for the long term and how you should build your portfolios. Let's quickly get on board with Anil, Rego, founder and CEO, Right Horizons, joining me. Anil, good afternoon. I mean, Nifty is back below that 26,000 levels. So what can be the key factors that could drive the markets ahead? Because this month has been good for the headline index.
Yes, so I guess a period which has been reasonably good. So some bit of, intermediate slowdown is also okay in the index. I think you have a whole lot of news items that can drive the markets, into this rest of this quarter. I think one of it is as results keep coming out, I think that will be good. Second is also it has been a good Diwali, and I think the anticipation of a good, this quarter, the third quarter, will also, I think, be positive for Indian markets. So I think you have at least earnings growth, hopefully will help drive markets up.
Okay. Anil, we have seen that the second quarter results have seen some signs of resilience. We're seeing corporate profits, which is rising after 8 quarters. But does this make us on track with the double-digit growth guidance that the street has been watching out for the second half?
Yeah, so that's broadly sort of our point of view also in the past, where one said that, through the rest of this year, you would see growth in earnings, and it'll keep going up as time goes by. And I think the great thing is, you had a good quarter last quarter, and things are moving up. The question is whether it hits the magical 10% number is something that we'll have to watch out for. But I think we will be possibly close to it, even if it is under. And considering that this quarter also, if you see the volumes have been good this month, etc. Hopefully, this quarter will add on and consolidate on the news out there. Then there's this whole big US treaty. If that sort of happens, then that will be the icing on the cake.
That's right. That's right. Of course, the trade talks are yet to fructify. But yes, coming back to the earnings, Anil, I mean, we have seen small caps seeing quarter and after quarter earnings decline. But do you think that the scenario has changed this time, or can we see more downgrades from the small cap space?
No, I think this time hopefully should stabilize, but I think the real stabilization should come in either in this quarter or the next. Okay, in small caps, of course, I think in large caps there has been some bit of stabilization as well as the mid caps. With the GST cuts, etc., I think that will also help the small cap companies, and that should hopefully give them a bit of a lease of life.
Okay, okay. And then let's get in your sector view also. Can you point out which sectors are you seeing for a double-digit growth visibility from here on then?
Yeah, so of course, I think sectors and is something that we believe that will do well. Some of it is we are betting on hospitals. We are sort of also betting a little bit on consumer discretionary, and within that we also like a few pockets like fashion retail and maybe jewelry as segments there. I think we liked wealth management. Of course, there is some bit of news items and SEBI related items which we'll have to, I think, watch out for. So hopefully that will also deliver. But we'll have to see what the impact of any of these stuff, including of mutual funds. Then we also like I said, hospitals and some bit on the aviation side.
Okay, okay. Anil, you mentioned about the wealth management companies. I mean, how would you suggest investors to approach it? I mean, we have the SEBI's consultation paper, which is yet to take place, but majority of the experts, they are highlighting an earnings risk of about 7 to 8% to EPS.
Yeah, definitely. I think if that comes in, that will have an impact. There was this news around FNO as well. I think that also, had a little bit something in the previous quarter. It has been, a bit of a string of bad news. But I think I would still look at it from a longer term. I think that would still make up and do well because of the tailwinds of the sector in itself. I think the penetration, of India, for example, if you see professionally managed, the percentage of professionally managed wealth in the US is say 75%, whereas in India it's 15%. So there is definitely scope in the long term. Like I said, in the short term, one needs to watch. So I think what an investor can do is not, allocate fully to the sector, even if one is looking to do. Maybe do it in a little bit of phases so that if you have some of this volatility that kicks in, that you can take advantage of and use it to sort of enter into the sector.
Okay, okay. Anil, what about the IT sector? I mean, we did see a sharp fall in terms of valuations, and the Q2 results has still panned out well in terms of what the street was estimating. But AI growth visibility, that is yet to play out. But how are you placed on the sector? Are you seeing it as a contra bet?
Yes, so we have been a little negative on the IT sector for some period of time. But of course, now I'm saying from the standpoint of valuations, I think we are a lot more comfortable with IT than in the past. Yeah, so we are not, our companies are mainly IT services and not directly benefiting from AI. Of course, there may be AI implementations that can happen and that may give some bit of tailwinds out there. But there is also disruption that will happen in terms of larger projects, and the nature of projects will also change, possibly become smaller. I think when it's AI-based projects, even smaller, companies can sort of deliver faster and smarter. So So I think from that standpoint, one will still be a little cautiously optimistic on IT services. But I think just from the standpoint that it has been a long correction, and valuations also have come off quite a bit, and the performance of the companies are not too bad. I think that on a selective basis, you can look for companies hopefully which are able to get some, have a larger exposure to say AI type of projects, etc. I think those are companies that one can sort of focus on.
Okay. Anil, just one last question before I let you go. I mean, you mentioned that you are bullish on wealth management companies and aviation, but apart from that, anything that you're conservative on?
Yeah, so at this point of time, I think one may just want to watch out for let's say the pharma side. Okay, so and but broadly, I think from a sectoral thing, I believe that we have taken a pause right now. So one is not seeing any great sectors which are under there's some risk, so to say, from coming off, because many of them, the sectors which did very well also have come off, and you find that even IT services, which has been under pressure, has also come off. So I think since we've had a bit of a price correction already, I'm not as sort of negative, on too many sectors.
Okay. All right, Anil, with that, we have to let you go, but thank you for connecting and joining with us. Right now, let's go across to my colleague joining from the Mumbai studios, Yatin Mota, and discuss about how the individual movers are looking like at this point of time, because we did see a pause for the second consecutive day. Yatin, good afternoon. I mean, Nifty is below that 25,800, but the month has been quite good because both the headline indices have been up by about 5% each.
Absolutely. I think, for the past few weeks, we have seen strong momentum in the earnings season, the Diwali as well as the Dussehra demand, the festive season demand. But yes, past 2 or 3 trading sessions have been quite weak. In fact, for the week also, we were trying to consolidate and trying to digest that 26,000 level on the Nifty. Today's session was particularly challenging because, after the Tuesday and Thursday monthly expiries for both NSE and BSE, we hadn't expected a sell-off on Friday, or probably we were expecting a broad consolidation. But if you look at the Nifty, 150 points down, Sensex down almost 500 points. The mid and small cap indices also half % lower, and the reason why the advance decline ratio was almost 1:2. So probably the markets is digesting the gains that it made, the macro situation that it is suffered, and probably now getting back to the earnings trajectory with more and more earnings expected next week as well, including SBI.
That's right. Right, yeah, since you mentioned about earnings, so let's quickly discuss some of the individual movers that reacted to its second quarter performance. We'll first talk about ITC, one of the top Nifty gainers. It stood well despite a muted market sentiment. Well, the company did report a steady second quarter performance, wherein excluding the paperboard and agri business, cigarette and FMCG did well. If you look at the cigarette volumes, they grew above estimates at about 6%, whereas FMCG revenue was up by about 7%, beating estimates as well. Now, like I mentioned, the agri business didn't do well. That was because on the back of the seasonality and a high base as well. The company also saw pressure on its value-added exports, which were hit by geopolitical uncertainty and US tariffs. But brokerages, they remain quite bullish on the counter, because you have Jefferies, which gave out a buy call on the counter, shared a target price of about 535 rupees. The brokerage said that the cigarette volumes was better than many of the other FMCG peers, and the fact that the management expects business momentum in the upcoming quarters to sustain is what kept them bullish as well. Citi also shared a buy call on the counter and said that though the margins have seen a bit of a pressure, but the company's product mix and brand strategies will help protect its market share. Nomura also gave a buy call, target price of about 540 rupees per share, expecting some recovery in the paperboard segment, while agri-business did face a high base. So yes, Yatin, coming to you for ITC, of course, it's been brokerages have given a thumbs up on the counter, and they expect about 535 as the next target price.
Absolutely, and if you look at ITC, it has been one of the better lots in the FMCG space. Volume growth was balanced. We know that there is a GST transition happening with the FMCG companies, so nothing to blame. And the weakness in the volume growth is probably offset by the strong margin performance for the quarter. So good going for ITC when it comes to the quarterly numbers, and probably second half will reveal as to what the FMCG companies do in terms of overall growth. Right now, stock after gap up was almost flat in trade. But what was doing well in trade, Lovisha, was Navin Fluorine, and this stock had a 15% intraday rally post the quarterly numbers. The numbers not only surprised, the company also announced the various capital expenditure for its new chemical businesses as well as refrigerant gas, which is R32. They'll increase it by nearly 15,000 MTPA. Now, talking about Jefferies, they have maintained a buy on the counter with a target of 6635. So is the case with UBS, wherein they have maintained a target of 5,900. Talking particularly about Navin Fluorine, we have seen the margins around 30%, in which there could be some further upside. Not only that, Jefferies is expecting a EPS CAGR of nearly 44% till FY28. And the kind of earnings, the kind of new business opportunities moving forward for Navin Fluorine's CDMO business along with the chemical business is something we'll watch out for. But overall, a very strong quarter for Navin Fluorine, and the stock on your screens up nearly 15% in trade today.
That's right. Good moves coming in from Navin Fluorine, 14%, quite an uptick for the counter as well. But yes, let's shift focus from Navin Fluorine and talk about Swiggy, because that stock, did well in the initial part of the trading session, but has cooled off from the day's high level. The company did announce plans to raise about 10,000 crore rupees through its QIP, and also it released its second quarter result as well. Number-wise, losses nearly doubled, while top line did see a strong double-digit growth. But brokerages, they largely remain positive, seeing both improvement in its quick commerce and food deliveries contribution per order, and that is what kept them buyers for Swiggy as well. If you look at Nomura, they've shared a buy call on the counter, saying that the fundraise would help strengthen its balance sheet, especially when it comes to the quick commerce business. Nomura also expects the company to keep up its growth momentum in food delivery, and they've projected about 19 to 20% year-on-year growth in its gross order value throughout FY27. CLSA, meanwhile, they have given out an outperform rating. They've called the second quarter as a mixed bag, wherein Instamart saw better contribution per order and food delivery too saw better take rates. But contribution and EBITDA has come in tad below expectation. So, Yatin, good brokerage commentary for Swiggy, but what they plan to do with the fundraise and how it will help the balance sheet going ahead is something that we'll be monitoring for.
Yes, and I think, the quick commerce segment, Lovisha, that is one piece which has grown 100% for the quarter, and the fundraise probably to increase the dark stores, to increase the quick commerce business, because, these companies from typical food delivery businesses have evolved into food delivery stroke quick commerce businesses. Now they plan to, localize inventory. They are looking to expand their network, and, it requires a lot of cash. And probably the step in that direction to raise nearly 10,000 crores. I think apart from the quarterly numbers, the quality of investors and the kind of fundraise that they do probably in the upcoming board meeting is something we'll watch out for.
That's right. That's where they're coming from, Swiggy. All right, let's shift focus and talk about Bandhan Bank. The stock has declined by about 8% in today's trading session, given that the brokerages weren't too impressed with its second quarter performance. CLSA has downgraded the stock and cut its target price by about 13%. The brokerage has downgraded its rating to about accumulate from buy, saying that the lender's net interest income and pre-provision operating profit were weak and credit costs were quite high. The lender also posted NIMs, which has declined by about 60 basis points in the second quarter, but they have mentioned the fact that the margins could have bottomed from here on and will recover from FY27 onwards. Nomura has given out a buy or neutral call on the counter with a target price of about 170 rupees per share, and it has said that the company has reported a weak second quarter with soft NIM and asset quality. It has also cut the lender's FY26 to 28 earnings per share by about 13 to 38%. But yes, Yatin, not just this, but analysts do believe that the worst of margins would be behind for the banking pack. A turnaround could be likely from the second half, but for Bandhan Bank, the MFI business, that is where majority of the losses came in from.
Absolutely, and I think their business has been struggling with asset quality. Every quarter or probably, every half year, the company says that, next second half will be better, next quarter will be better. But if you look at the asset quality, it has been terrible. The kind of write-offs, the kind of slippages, the kind of net interest margins they have posted for the quarter, I think it is one of the worst lots in the banking space. And probably the reason why the stock is hovering around that 52-week low level. Stock was down nearly 8% in trade. Clearly Bandhan Bank, not the best of the numbers. Investors are just trying to move away from the stock. Even at these valuations, the stock is struggling to keep up. Probably the trust factor, or probably the kind of asset quality woes which are there, they continue to be a big challenge for the bank, and clearly a reason for derating, especially after we had several top level exits in the company.
All right, Bandhan Bank, that is something we need to watch out for. But yes, all right, that's all the stocks we have for today. Nifty has definitely taken pause for the second day, but for the month gone by, this headline indices have posted good returns. And how the month of November is going to shape by, that is something that we need to watch out for. The trade deal is yet to fructify with the US. That will shape the tone of the trade. And also we have earnings season, which will also unfold going into November as well. But yes, so with that, we have come to an end of this edition of Closing Bell. But before I let you go, let me once again introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Moneycontrol app and subscribe to Super Pro today itself.